Oracle released their latest quarterly numbers Monday after the market closed. The stock went up 11.44% on Tuesday. Now, year to date, the stock is up close to 50%. Year over year, the stock is up 25%, now has a market cap of close to $430 billion. Has a forward PE of 24.2 times. And as you can see here from the analyst estimates, sales growth at least, is expected to accelerate in the coming 2 fiscal years. And the same for EPS. EPS growing actually a little bit faster than sales growth. Now, could Oracle be a $1 trillion company, meaning more than doubling its market cap today? Could very well be if they continue like this, if the growth rates continue to be double digit. Now, currently, the average analyst price target sits just 3.4% higher than the price we're at today. Yes, this is even with all the new price targets that happened after the earnings report. Now, right now, if you look at forward PE, EV to EBITDA, price to sales, price to free cash flow, price to earnings to growth, yes, it's true, it is more expensive than its 5-year mean. But as you will see in just a bit, the company is in a different phase right now. It's in a growth phase, something that we haven't seen from Oracle before. So before seeing that the 5-year mean here, forward PE, sits at 16.6 times, makes sense. Makes sense that today we're a bit more expensive because we're also growing faster. And so before jumping into the report and a couple of things that were mentioned by management, plus some extra things that I added, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I know the last time I talked about Oracle, not that many viewed the video. Hopefully this time it will be different. Anyways, leave your thought down in the comment section below. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now I first want to start off with 2 other companies, AWS, Amazon AWS and Google Cloud. Both of those are quite something. Of course, AWS is already huge and is growing now 18.17%. You can see here a reacceleration in the last quarters. Same for Google Cloud. Of course, a bit smaller. I mean, it's at $10.34 billion for the quarter, last quarter, growing 28%. So if they're keeping this pace, I mean, this is going to be a money-making machine for them. Now, why am I saying this? Well, of course, when you want to grow these types of things, CapEx is going to be increasing as well. Here we've seen Amazon's CapEx increase earlier and much faster than Google's. Of course, we've also seen huge investments during the pandemic, supply chain improvements, warehouses, stuff like that. So it's not all AWS, but more recently we have seen reacceleration, and that is for AWS AI infrastructure and stuff like that. We've seen that as well with Google, which is also one of the reasons why free cash flow has not been growing as much as before. All right, now that we've got that out of the way, I can talk about the other stuff. Switching to Oracle, of course, there are 2 big segments here. One, the infrastructure cloud services one, and the other one, application cloud services and license support revenue. And as you can see, previously, these things were growing low single digits, right? Then, of course, we've got some huge acceleration for Oracle application cloud services and license, and of course also big acceleration in growth for the infrastructure cloud services, now growing double digits, 13%, 14% or so. And so for the quarter, GAAP earnings per share was up 20% to $1.03. Total revenue was $13.3 billion, up 7% year over year. But here's the thing. Total remaining performance obligations, or RPO, is up 53% to $99 billion. Cloud revenue, that's infrastructure as a service plus SaaS, $5.6 billion, that was up 21% year over year. Cloud infrastructure revenue was $2.2 billion, and that was up 45% year over year. Cloud application, that's SaaS, $3.5 billion, up 10% year over year. Fusion Cloud ERP, up 16% year over year, and NetSuite, up 20% year over year. Now, as you've seen, RPO is up 53%. This strong contract backlog will increase revenue growth throughout fiscal year 2025. Oracle has 162 cloud data centers in operation and under construction around the world. The largest of these data centers is 800 megawatts and will contain acres of NVIDIA GPU clusters for training large-scale AI models. And in Q1, 42 additional cloud GPU contracts were signed for a total of $3 billion. And so, switching to what was mentioned during the earnings call, a couple of things here. One with regards to data centers and AI training. So Oracle is building giant data centers with high-performance RDMA networks and large NVIDIA GPU clusters to power its AI training capabilities. These data centers can be over 1 gigawatt in size. Oracle has made its latest Exadata and Exascale RDMA database technology available on other cloud platforms like Microsoft Azure, Google Cloud, and AWS. This will enable customers to use the Oracle database anywhere, which Ellison believes will turbocharge the growth of their data center business for years to come. And Oracle, unlike the other cloud players, they are basically focused, well, fully focused, I would say, on nations and enterprises, no small players. So their, let's say, niche-ish thing is to be highly secured and of the highest quality. Larry Ellison also discussed how Oracle is using AI and automation extensively across its products and services, from healthcare applications to security features like biometric authorization and zero trust networking. He emphasizes that automation is key for improving security and reliability. He also mentioned that the race to build powerful AI models is ongoing and will require massive investments of over $100 billion from the few companies and nations that can compete. There is no expected slowdown or shift away from the need for AI training, which we've talked about before when talking about NVIDIA, especially after the stock dipped. I repeated what analysts were saying, that, well, actually it wasn't analysts, I think it was Eric Schmidt, ex-Google. I think he said that over the next couple of years, these companies, these huge companies, are going to spend $300 billion or so. And since NVIDIA has the big market share, most of that money will go towards NVIDIA. Now, the big question that was asked and finally answered on an earnings call is, how are they going to start monetizing this AI thing, right? Because everybody's investing in AI, but who's actually monetizing it? So here's an answer, finally. He says, the fact that we can dramatically expand our health business is because it's based on AI. AI is just, I don't know how to describe it. I mean, the best way to describe it, it's not something you sell separately. It's the diagnostic system. It's the electronic health record system. It's the pharma system, the prescription system, the user authentication, the login system. It's all AI. And I know people think it's a separate thing, that, oh my God, and I hear a bunch of applications come and say, oh, we've got some AI agents, we'll charge separately. I mean, our applications are going to be primarily AI applications. Everything. How do you charge separately for everything? He doesn't understand. He finds it bewildering when he listens to the other folks talk about that. I don't understand what they're saying. We wonder, and he'll stop right there. Basically, he says, AI for us is basically what we're offering. All of our offerings, everything has to do already with AI. It's not an extra thing that they're going to add on top, or the left or the right or the center. He then talks about something very specific here, well, specialized models, maybe I should say that, with regards to these frontier models. There are going to be a lot of very specialized models. I can tell you things that I'm personally involved in. This is not me speaking, it's of course Larry Ellison, which are using computers to look at biopsies of slides or CT scans to discover cancer. By the way, I've seen a report saying that one of these models can detect cancer 5 years before, well, it even appears. So that's quite something. Also, there are blood tests for discovering cancer. Those tend to be very specialized models. Those are not necessarily the foundational models that you've seen in Grok, ChatGPT, Llamas, and the Geminis. They tend to be highly specialized models, trained on image recognition on certain data, literally millions of biopsy slides, for example, and not much other training data is helpful. I think Elon spoke about that as well when the report about Tesla potentially partnering up with xAI, using their resources, training, etc. Tesla vehicles, well, their system, they are basically training on video, imaging, very specific things. It's not very helpful when it has to also have all the extra data, right, that xAI has. No, it has to be very specific. for autonomous driving. And that's about it. So we're going to see a ton of specialized models, and I think it's going to blow our minds. I know right now we're all exposed to ChatGPT, Gemini, Perplexity, and stuff like that. To be honest, sometimes those things are quite dumb. Still, yes, still. So yes, I continue to use Google search. Sue me. Moving on to one of the last things here, and to be honest, the way he said it during the earnings call reminds me a lot of how Elon Musk speaks. No wonder that they are good friends. So he says here, let me say something that's going to sound really bizarre. Well, you'd probably say, well, he says bizarre things all the time. So why is he announcing this one? It must be really bizarre. So we're in the middle of designing a data center that's north of a gigawatt, but we found the location and the power place. We look at it, they've already got building permits for 3 nuclear reactors. These are the small modular nuclear reactors to power the data center. These are crazy it's getting. This is what's going on. So yeah, if you think we are in the 7th inning, as you say in the United States, I think you might be wrong. I think we are still in the maybe 2nd inning, I would say. Last thing here, the major overview, beats and misses. Mostly beats, 2 misses here. Revenue hardware missed by 5.2%, and services revenue missed by 5.4%. All the rest were beats, and so was Q2 guidance. And so right now, what do we have here? Well, we have a stock at all-time highs. We also have RSI that is overbought. So yeah, that's Oracle for you right now. A lot of positive momentum for this business, extremely well-run business, great management. Stock has run up quite a lot. Of course, this is not the first time we've seen stocks being overbought and staying overbought for quite a long time. So we'll see what happens. The 200-day moving average sits at $125. The 50-day one at $136, and the 20-day one at $138. Yes, August 5th, the stock was at $125 or so. So overall, to conclude, another great quarter by Oracle. Like I said in the last video for Oracle, is it too late to buy the stock? It wasn't. Clearly it wasn't, because the momentum is still with them. And did it change right now? No, we've seen RPO, right? RPO is up, what, 53% year over year? Close to $100 billion. I mean, it's right there in front of us. Even if you're an NVIDIA shareholder, this was a positive quarter for Oracle, positive commentary for NVIDIA and all the other folks out there as well. So yeah, could Oracle in the future be worth $1 trillion? I think so. If they continue like this, I think by 2030, I think it could be $1 trillion, maybe even earlier. But yes, I do think Oracle in the future, if they continue like this, could be worth $1 trillion. Save this video if you want. Maybe I'm completely nuts. I personally don't own the stock, but I very much like the way they operate, and I'll continue to follow this company. That's all I've got for you right now. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.